A short time ago, the United States military began major combat operations in Iran.
Now, if you've been watching markets recently, we've had lots of news. Today, we're going to look at the US hits Iran and what this means for markets and crypto. Overnight, the US and Israel launched a major strike campaign on Iran, and Iran responded with retaliatory attacks across the region, including US targets and bases. This is a real escalation, and the first market question isn't politics, it's energy, inflation, and risk. When the Middle East goes from tension to active conflict, markets immediately start pricing in one thing: supply disruption and uncertainty. A lot of people are saying that the US has declared war. Here's the accurate version of this. The president orders strikes, and in Washington, the fight right now is whether this is an act of war without congressional authorization. That's why you're seeing war powers headlines and lawmakers demanding a vote. So the situation is effectively war-level escalation, but the legal constitutional debate is ongoing, and markets care because it signals this may not be a one-off. Now I want to look at the market mechanism. Iran signaling restrictions and closures around the Strait of Hormuz and shipping responses. Reuters reports major shippers and energy players suspending or rerouting shipments and highlighting that Hormuz is a critical choke point for global oil and LNG flows. If that choke point is disrupted, the shock hits energy prices first, then inflation expectations, then interest rates. There's also a chain that markets trade. Energy risk to inflation risk. Inflation risk, yields can rise and stay sticky. Growth fears, risk off, equity softer. Risk off and global stress, dollar tends to catch a bid. Not often, but always. So you'll typically see a risk off bundle. Oil up, equities down, safe haven demand up, and a tug of war in yields depending whether inflation fear or recession fear dominates. Now, crypto trades this kind of event through two channels. Channel A is risk off liquidity. When the world gets uncertain, portfolios de-risk. They usually hit alts first, then Bitcoin if it broadens. Today's reports showed Bitcoin dip sharply after the strikes before stabilizing. This is classic. Headline shock, liquidity sweep, then stabilize. Channel B is the hard asset or distrust narrative. If this escalates into a prolonged inflationary energy shock or physical deficits rise, the hard asset framing strengthens, but usually after the first risk-off wave. So the takeaway isn't war equals bullish Bitcoin or war equals bearish Bitcoin, it's war equals volatility. First the liquidation, then the repricing. Now the deep point is why people say fiat makes war easier. A government that controls its currency can fund huge spending surges through a mix of taxing, which is politically painful, borrowing, selling government debt, or money creation. The state gains resources because it can create liabilities the public accepts as money. Historically, major wars showed this clearly. During World War II, the Fed pegged rates to help financial government debt, effectively supporting war financing conditions. And the post-war period led to Treasury-Fed Accord restoring separation. And big debt overhangs have been liquidated in history through combinations of inflation and financial repression, which only works when debt is issued in your own currency. Basically, a simple way to put this is fiat doesn't magically create resources, but it does make it easier for governments to mobilize resources quickly by issuing debt and in some cases letting inflation do part of the financing work. That's why in conflict regimes, markets watch deficits, central bank stance, inflation expectations, and real yields, because that's the long-run backdrop crypto cares about. Now in markets, it's important to make the distinction between news that matters and news that doesn't matter, but here's a simple watch list that tells you if this becomes a regime. Hormuz and shipping, the disruptions persist or normalize. For the oil trend, spike and fade, or do they sustain uptrend? The DXY and the yields, if the dollar rips and yields stay high, then risk assets struggle. And for Bitcoin structure, does Bitcoin hold key levels while alts bleed? Regardless of all this, we'll still be watching all markets very closely. We'll be taking trades, and if you do want to see our entries, if you do want to talk to us about macro environments and all different types of markets, I'll leave a link to the free Discord down below. I'll also leave a link to our website down below where you can join the weekly watch list. We do weekly setups, we watch levels, and we give macro context every single Sunday. And one of our most important tools at Summit is the Summit Indicator. You can also get access to this, and this makes it super easy for everyone. You don't need to draw lines on charts, you can see clear trends, bull trends, bear trends on the Summit Cloud. Make investing as easy as you can for yourself, check it out, and if you did like the video, please leave a like and please subscribe.